Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how the US E-minis unfolded yesterday, which was Thursday the 5th of March. You can see we've got days here. Actually, I'll just take this this DP off so you can see what the chart looks like with nothing on. You can see initially we have very few setups here on our 3-minute chart. But what I want to show you is how we actually go to much higher levels once you become a bit more experienced with the software. And on the ES, actually I'll just take that off as well because that's my analysis earlier. Again, the ES very quiet, apart from a DP cell there later in the day that was actually against a blue STF. But what we do is we go to the higher time frame. It's the multi-time frame analysis that I've been looking at over the last few weeks, and this is really where you take MTPredictor to much higher levels. Let me show you what you mean on this. So to get the higher time frame trend and higher time frame support and resistance areas, we go to the higher time frame, which is between 3 and 5 minutes. 3 and 5 times higher than the one we're looking at. So on that 3-minute chart, it would be the 15-minute chart. If we're looking at, say, 15 minutes 4x, it would be the hourly. If you're looking at daily charts, it would be the weekly chart. Now these are great because what we do is go back to prior pivots. So before yesterday even opened, you can see this is the bars for yesterday here, the 5th. Before yesterday even opened, you'd have gone back to the last pivot high, which was the swing high made here halfway through the 4th of March. You'd have right mouse click over that pivot, selected DP. Now that would have projected a level in advance. That's the beauty of these levels. They are on the chart in advance before the market gets there. So this would have given you an area where the market was likely to find resistance. And actually also what you can see is once the high came in, this high was actually confirmed as a TS3 sell setup anyway, but of course that wouldn't have been confirmed till the market date had come in. We're looking for leading indicators. So let's have a look on the 3-minute chart. And as you can see, there's our 15-minute resistance. So what does that mean? It means that basically that will set the resistance area. Then after the market's hit that, the larger trend will be down. So in other words, you're looking for sell setups. Now on the ES, there weren't any sell setups, so it was a good example of why you should be following other markets and other time frames. Let's go out to the 15-minute of the YM. And they do exactly the same. You can see we had the same position after the high came in yesterday. It was confirmed as a TS3 sell, but obviously before that, just with the with the ES, we go back to the prior pivot high there. We place that level on the chart. That would have been on the chart in advance before yesterday even opened. You knew that that was a resistance area. And let's go back to the 3-minute chart. And as you can see, that pretty much nailed the high of the day for you very nicely. So what should we have been doing then? Well, we should have been looking for sell setups. Now there weren't any sell setups on our 3-minute chart. The other main time frame we look for is on our 5-minute chart. There weren't any sell setups on our 5-minute chart either. However, if you're an experienced user, there is a legitimate reason to go down to a shorter time frame, in this example the 2-minute chart. Now right, I only suggest doing this if you're an experienced trader and you know the larger degree trend direction. I'm not suggesting you just trade on 2-minute charts. I'm suggesting you have your scanner running. So you can have your scanner running here, so you can set, if we put a symbol list in here, you can set what time frames you wish to follow. So if I want to add my 2-minute charts in there, it will actually follow those as well and alert you to setups on your 2-minute charts there as well. So what do we find here? Well, we had a higher time frame resistance, we had an initial decline down here, we had an initial rally up. Now we ignore the STF in this particular example because we know we're more experienced traders, therefore we know that we're using the higher time frame. So from this, we're looking for sell setups. There's our TS1 sell. Let's place the analysis on. Now this is a specific type of sell. In other words, we call this our holy grail. Why? Because this is at a higher time frame resistance. This is the initial correction down, which is wave 1. The initial correction following a wave 1 is normally a wave 2. A wave 2 ideally should subdivide into an ABC or minor or lesser degree ABC, which is what it did there to give us our TS1 sell setup. Therefore, we're not looking to come out our minimum wave CWPT. Our initial aim is to go for the typical wave 3 WPT all the way down there. Our correct position sizing keeps our initial risk small and under control. This example less than 2% of a sample $20,000 US account. So that was our target, which would have been an absolutely massive 12-hour trade. That's a rather large trade, that is. So that would have got us short. That would have got us short very nicely. And of course the market was going down here. We had a potential buy setup here. Of course we're not even looking for buy setups because we know the large degree trend's down. But now comes the experience. Now becomes the experience when the market gets down into this area here. You can see it starts to decline very sharply, and we have some high volume VSA spikes coming here. Now normally we use these for a nice VSA reversal indication, but in this particular example we can use it to help manage our trade. What do I mean by that? Well, we know from our normal analysis that the last swing into a high, there was a little wiggle there, but that wasn't really much of anything. We had a nice pivot low a bit earlier in the day here. So if I go back to this level, we place our DP on. Remember, these are leading indicators. They're on the chart in advance. You can see this was an area of where the market was likely to make a reversal on this particular 2-minute chart. As the market came down into this level, we noticed that the volume was increasing. Now that normally means for amateur traders that the selling is increasing and carrying on down. However, we know that if the market suddenly reverses after a bar that has a VSA spike, we know that's professionals stepping in and the market is likely to go the opposite direction. This is the basis of our VSA setup. However, in this example, what we can do is use this to protect our current long trade. Now, why would we want to do this? Well, once we get into this area here, can you see that our potential profit at this area is 8R, in other words 8 times greater than the initial risk. Now this is a very good profit, so it's something that you actually want to protect. I mean, you may decide that you actually want to stick to try and get the full 12R, but I think personally myself, if you're sitting on a 8R profit like this, it's not a reason just to bank it just because it's got to 8R, but what I'm saying is because it's at 8R and you're in an area of where the market is likely to make a reversal, and the volume is coming in and telling you that it's also likely to make a reversal as well, and the professionals are now starting to move the market back up, you can gauge how important this profit is. This is why we do our profit targets in risk units as well as pure dollars, because you can see how important that profit is. A profit of 8 times the initial risk is actually quite good to take. So what I suggest is start to trail this above the 1 bar or 1 tick above the bar highs as the market comes through. Then if the market was going to carry on down lower, you could then wait for the typical wave 3 WPT, and if it was going to carry on lower, it would go straight through this if this was indeed selling volume. However, you're protecting yourself if it's not, and in this case it wasn't. It was the professionals coming in and looking to then move the market higher and take profit after this little decline. So in other words, you locked in a 8R profit at this minor support zone here as well. The market then reversed back up, and that would have been a very nice trade. If we look at the NQ, there was also on the 15-minute chart, remember we use our DPs in advance, if you go back to that prior pivot low there, that actually nailed the low at that same time as well. So there's another reason on the NQ why support might be coming in. That wasn't actually coming in on the ES. The ES had gone through it a little bit further, and on the YM on our 15-minute chart, just to check that, it hadn't. It still ideally should have kept on going down a bit further. But I'm just talking about being sensible and looking at protecting a pretty large profit at an area of where minor support may come in, and also the most important thing to me is the action of the market itself. In other words, when you're trading, this is why I believe that education is so important, and you shouldn't really just follow a black box system, is you should learn to understand what the market is telling you. So in this particular example, we had a great Holy Grail trade setup where we had resistance here nailing the high of the day. That set the large degree resistance area, which in other words made this an important high, with the initial decline down, initial correction up, minor ABC into a TS1 sell. This normally is a wave 2, and we're normally anticipating a strong wave 3 kind of decline. That would have been a massive profit. However, what I'm suggesting is use your common sense as the market gets into an area of where there may be minor support. You watch what the market is telling you itself. In other words, this is telling you that there may be a reversal. You look at the profit at that level and you say, well, actually 8R profit is very good and something that you really want to bank. Therefore, you put that in the bank and say thank you very much and move on to another setup. This is what learning how to become a good trader is all about, and why I'm so adamant that it's good for people to actually learn how the markets unfold and learn how to read the markets rather than just following a black box system. But anyway, hopefully this has been a good example of how to use the tools in MTPredictor above and beyond just the automatic standard trade setups, where you're gauging the large degree support and resistance to gauge or to identify potential trade setups in that large degree trend direction. Then you're using your knowledge of how the market should unfold, particularly with minor support, and your reading of the volume, to then be able to lock in a lovely 8-hour profit. So a very good example of lots of the tools in MTPredictor all at work there to uncover a very nice and very profitable trade yesterday on the YM.